what if you could get paid if Bitcoin goes up, stays flat, or even drops a bit? And yes, in all three scenarios, you make money. I'm full-time institutional crypto trader. And in this video, I will show you step by step how to trade crypto options on ByBit with a real life examples. So let's go. So let's assume I am ready to buy Bitcoin at a price of $66,000. That level looks like a very good resistance zone. And from the current market price of $69,000, this is almost 6% discount. And for my readiness to buy Bitcoin with a discount of 6% by using options, I will get $3,000 for that. And that $3,000 I get in any case, no matter if the price will go up, stays flat, or even drop. So here you can see this account has 1000 USDC and 0.01 BTC. And after the put option is sold, the premium will be directly credited to this account. So let me show you how this works. So as I said, I am ready to buy Bitcoin at the price of $66,000. And if I am ready to buy 1 BTC, for that I will receive directly $3,160. For 0.01 BTC, $31. And let me show you that. I click on the strike price. Let's select the quantity of 0.01 BTC, the price looks good, and I click on the sell button. Confirm, and it's done. So USDT should be directly credited to my account. So let's check. And here you can see, now I have a balance of USDT, which is equal to 31 USDT. And this is exactly what I received for my readiness to buy 0.01 BTC at the price of $66,000. And as you can see, that's a great strategy. But now let's go step by step from the beginning. And let me show you how to find the options and how to start. And first of all, to find the options, we have to navigate to trade and then to options. And here you can see all available options that you can trade on ByBit. So you can trade options for Bitcoin, Ethereum, Solana, XRP, MNT, Doge, and tokenized gold. Let's choose Bitcoin options. And before we start to trade options, the most important step is to choose the right margin type. And if we go to a margin modes, we can see that the ByBit has two margin types, portfolio margin and cross margin. The cross margin type suits better for the single leg options trading. So that means if you would like to buy or sell one single option. But if you would like to trade more advanced strategies, which gives you more flexibility and reduce the risks, portfolio margin is a better choice. And if you would like to learn more about the margin types, you can always learn more about the margin types on official ByBit website. And here we can see the option chain. Before I show you exactly how to execute the trade, let me give you some basics about the options. There are only two types of the options, calls and puts. If I would like to benefit from price increase of Bitcoin, I have to buy call option. And if I would like to benefit from the price decline of Bitcoin, I have to buy put option. And this is one of the most common mistakes of all beginners. So that's why very important. If you would like to benefit from the price decline, you have to buy the put option. And now let's find calls and puts on the option chain. So here we can see once again the option chain. And before we take a look at the calls and puts, the first step that we have to do is to select the expiration date. And the expiration date we can find on the top. And the expiration of the option is the date when the options will expire. So that means after that day, the option will not exist anymore. So that's why it's very important to select the right expiration date. So here you can see the short-term options, the mid-term options, and also the long-term options. For example, that option has more than 1 year until the expiration date. And after expiration date is selected, we have to take a look at the calls and puts. On the left side of the option chain, you can find all the call options. And on the right side of the option chain, you can find all the put options. And in the middle of the option chain, you can find all the strike prices. And don't worry, this is not so scary as it looks. And you will see that right now. And the strike price, this is a fixed price at which option can be exercised. And let me show you with example what does it exactly mean. For example, if I would like to benefit from the price increase of Bitcoin, I can buy a call option with a strike price which is almost close to the current market price. In this case, $70,000. And if the price of Bitcoin at the expiration date will be above the strike price, so let's say $74,000 at the expiration date, in this case, my profit is the difference between the strike price of $70,000 and the mark price at the expiration date, so $74,000. And in this case, if I bought one call option for 1 BTC, my profit is equal to $4,000. And it works exactly the same with put option. So let's assume I bought a put option with a strike price of $69,000. And at the expiration date, the price of BTC dropped to $65,000. In this case, my profit is also equal to the distance between the strike price and the market price of Bitcoin at the expiration date. In this example, the difference is between $69,000, the strike price, and the market price of BTC at the expiration date, so $65,000. As a result, the profit in this case will be equal to $4,000. And very often I receive the following questions. Which expiration date is better to choose? Short-term, mid-term, or maybe a long-term? And after expiration date is selected, which strike price is better to choose? Which is close to the current market price or far away of it? Also, how to analyze the volatility and how to understand that right now is the time to sell the options. And of course, how to earn passive income with cryptocurrency options. And based on multiple one-on-one sessions with my clients, I created a guide to crypto options. I spent a lot of time to combine all important information in one guide. And from this guide, you will know how to analyze the market before the trade and also how to use strategies to earn passive income with crypto options. So if you would like to learn how to trade crypto options in professional way, you can find the link in the description below. And now let's come back to the option chain. So let's assume I think that the Bitcoin price could skyrocket to $74,000 or 5% higher than the current market price. And in this case, I can select the strike price that I would like to choose. So as an example, let's take $71,000. And to buy this call option, we have to click on it, and here we can see the trading window. To buy the call option, we have to take a look at the ask prices. In this case, the best ask price is equal to 90 USDT for one single BTC. And if I would like to buy a call option, I have to select the price and select the quantity. If I would like to profit from the price increase of 1 BTC, I have to select a quantity of 1. In this case, I have to pay 90 USDT for that. If I would like to profit from the price increase of the smaller quantity of BTC, so let's say 0.01 BTC, I can select the quantity I need and click on the buy button. Here you can see a short summary window, and to execute this trade, I need to press on the confirm button. And the trade was done. And here you can see now that I bought 0.01 BTC call option. Also, I don't need to wait until the expiration date. And if the price of BTC moved in my favor, I can simply sell this option and realize the profit. To close this position, I have to click on the strike price once again, select the sell side because we would like to sell our call option that we have. Select the price. In this case, we have to take a look at the bid price, and the best bid price at which I can sell this call option is equal to $85. So I select $85 and then I need to select the quantity that I would like to sell. In this example, my position is equal to 0.01, so I have to select the same quantity which is equal to my position. If you would like to be on a safe side and be sure that you're closing only existing position, you can select the reduce only mode. So then I click on the sell button and press on confirm button. and it's done. So here you can see now I don't have any position anymore. In general, I don't like to buy the options because you have to pay for it. And the options losing their value very fast, especially if it's a short-term options. And instead buying the options, I choose the strategies that have very high probability of success, quite low risk, and quite high return. And this is exactly the strategy that I was speaking about in the beginning of this video. And let's come back to the option that I sold to take a look at it. So here you can see that this option already lost a value a bit. So that means I already made profit. And if I would like to realize this profit, I can just simply buy this option back. Because this was a sold put option, and to close this position, I have to buy it back. And to buy it back, I have to click on a buy button, select the best ask price, because I'm going to buy this option. So adjust the price to 3075 USDT and select the quantity, which is exactly the same as my position size. And once again, if I would like to be on the safe side, I can simply click on a reduce mode. Then I click on the buy button and press confirm. The price of the option moved a bit higher, so I'm going to cancel this order that I have. So open orders, cancel. So the order was just cancelled, and I'm going to place the order once again. So 3090 USDT, quantity 0.01, click on a buy button and press confirm. And it's done. So here you can see I have no position, but also I could wait until the expiration date. And in this case, the full premium would belong to me. And if you would like to learn more about this strategy, how to buy Bitcoin at a lower price and get paid for that, you can click to my full step-by-step guide about this strategy. So see you in the next video. Bye.